I'm kind of curious, as far as global reserve currency, how do you see an unwinding happen if the US dollar were to lose its status, and what that would mean for, say, the average American? I mean, what does it look like for America if it isn't the global reserve currency anymore?
So a couple of things. One reason actually why China's been slow to catch on with their currency as a global reserve asset is because they're a closed system. And so judging by the size of the economy, they should be, arguably the second biggest currency right now, perhaps the biggest. But because it's a closed capital account, it's much less attractive than dollars and other assets. Plus, they don't have those big network effects that we built up before. They haven't convinced a lot of oil producers to sell in yuan, and they're not a major funding currency. But really, it's that closed capital account that has made them slower to catch on compared to, say, the euro, for example. And but one of the challenges, so now that, say, Russia's reserves are frozen, basically it kind of shows one of the downsides of the existing system. If you're a country, now you have to kind of question your reserve practices, right? The Wall Street Journal ran a piece called "If Russian reserves aren't really money, the world's in for a shock." And so in some ways that kind of mimics the closed capital account. Now Russia has been preparing for this, and so they have a lot of self-custodied gold. They also have some yuan denominated assets. But this war has been very expensive for them. It's cost them hundreds of billions of dollar euro equivalents in terms of frozen reserves. And so over time, if we start to see more of a diversification of reserves or less global willingness to hold treasuries and dollar-based assets as reserves, there's a couple of things you can see. So one of the, we always think that a lot of people kind of characterize it as though having the global reserve currency is a good thing. And for a lot of entities, it's kind of a mixed bag, right? So there are a lot of entities in the country for which it is a good thing. And then there's other entities in the country for that it's not a good thing. And so one of the things I focused on in my research is that the U.S. having global reserve currency status, what it essentially does is it adds an extra monetary premium to our currency compared to other currencies. And that sounds like a good thing. But it also makes your exports less competitive. Because in addition to your revenue being denominated in dollars, your expenses are denominated in dollars, right? So your wages, your taxes, your various expenses are denominated in dollars, and so that's part of the reason why the United States has run a structural trade deficit. Basically, there's so much demand for dollars that we have to get dollars out into the world, and we do that through our structural trade deficits. So our import power is stronger, and our export competitiveness is weakened. Except for the most high margin industries like software, healthcare, finance, things like that. And so for the everyday worker, if we start to see a diversification of global reserves, they shouldn't see a lot of change to them. They'd see both upsides and downsides. So their importing power could weaken, but you could see the benefit of reshoring and more export competitiveness that can benefit blue collar jobs and different types of manufacturing jobs, kind of real world jobs. Now, in the current system, most of the benefits accrue towards the upper middle classes and the upper classes. And so, if you work in, say, a service-oriented sector like healthcare, government, technology, you're getting most of the upsides of the current system, and you're not really getting a lot of the downsides. And so, for them, that can be destabilizing. You can essentially have less import power and more inflation overall. And so, one of the models we can look at is how UK lost their reserve status over time, in the kind of the first half of the 20th century. And it wasn't one specific event. There were a number of events that chipped away at it as a rising power came and kind of usurped them over time. And they had a currency crisis, they had an inflationary period, just like other countries did. And so for them, it wasn't necessarily disastrous, but it was this kind of loss of global prestige, global power. And overall, I would say it impacted policymakers more than it impacted the everyday citizen in the UK, right? So the UK lost global influence, but they still had a reasonable standard of life compared to other developed countries. And so I think the United States can go through a similar period where a lot of what we look like right now is the UK in the early 20th century, I would say.
Wow, that's really interesting. Well, so do you see the Bitcoin being a threat to the US dollar as the reserve currency, or an ally?
So I think it depends how much they use it. I think right now, in the very current snapshot, it's too small still, despite the fact that it's grown considerably. I mean, there's There's $13 trillion in U.S. denominated foreign debt in the world. There's something like, what is it, over $7 trillion in official reserves denominated in treasuries, plus more in terms of bank accounts and other things like that. And so you're comparing that to an asset that is currently worth less than 1 trillion and is more volatile. And so at the current time, we can understand why they've been slow to look at it, because when it was only worth tens of billions and then hundreds of billions, it's still not a huge contender compared to the dollar. But if it continues to reach, say, multiple trillions, then it becomes an interesting competitor to the dollar, or more specifically, the treasury, right? The idea that you can hold something long term that is outside of the dollar based system. Right now, I would say the biggest competitor to the dollar is still gold in terms of, say, official central bank holdings, but it's about rate of change, right? So we're seeing different countries kind of explore the use of Bitcoin as an alternative. In addition, unlike gold, Bitcoin also presents an alternative payment channel. So the ability to make difficult to censor transactions globally. And so we've seen some central banks dabble in that. And I think over the long run, if the network effect of Bitcoin continues to be very robust, and if adoption continues to grow, and if the market capitalization reaches multiple trillions, and if volatility continues to inch down as it's more widely held, that does become an increasingly interesting alternative to the dollar. Now, like I said before, the current dollar system isn't even necessarily benefiting the U.S. anymore, right? So we've had to run these big trade deficits, and that hurts a lot of people. And there's analysts like Luke Groman, for example, that are pointing out some of the ways that actually China is kind of using the dollar system against the United States. So you can argue that back in the 70s, when the system was established, it made a lot of sense, because it essentially helped the U.S. win the Cold War against the Soviet Union. It helped us kind of gain influence over the Middle East. It helped our economy a lot. But in the 90s, when you had the fall of the Soviet Union, you had the opening up of China. We basically probably should have reshuffled the system, basically changed some of the incentives around, but we didn't. And so what happened was we continued running these massive structural trade deficits. We actually accelerated them in the 90s. And what China did was China then became a large surplus. They were on the other side of a lot of that, along with Germany, along with Japan and others. And what China did was China would take all these dollar surpluses, and they used to buy treasuries, and they used to buy they used to help fund U.S. deficits. But then what they increasingly began doing is, instead saying, okay, we don't want to hold treasuries anymore, right? They're sanctionable. Their yields are below inflation. So instead, what China began doing is using their dollar surpluses to buy up all sorts of foreign infrastructure and foreign assets around the world, commodity deposits, infrastructure lending. They basically lent to a large portion of the developed world as part of their Belt and Road Initiative. And so they're kind of in some ways using the dollar system against the U.S. And so I think over time, if the U.S., if they resist it, it's very hard for them, because if you get the reserve currency kind of changed without your consent, it can be very painful. But if they see it coming, if they see the fact that, just due to technology, due to global economic trends, payment channels and reserve practices are kind of diversifying, if they get ahead of that trend, then they can use it for the benefit of reshoring, and use that over time and have a more graceful exit from the prior system. So I think it depends how good policymakers are dealing with that. And I would say so far they're not really getting it. So I would say so far it's not looking great.